this would mean that we will experience a 27.6% decrease in price same time next year. When I first joined the industry, the city didn't have this many homes. I mean, there's barely any high rises in Brentwood in 2008, right? Hi, everyone. Thank you so much for finding us on your favorite podcast app and or YouTube. My name is Joe Lee with Faith Wilson, Christie's International Real Estate.
And my name is Jeff Chan, also licensed with Faith Wilson, Christie's International Real Estate.
And starting from today, we're also known as the Mike for Vancouver Real Estate. Jeff, how are you? How was your weekend?
I'm good, Joe. It's good to see you again. Weekend was good. Honestly, that brokerage mingler that Faith hosted, super appreciative of it. Great to see everybody and just kind of have like a summer wrap up. I think collectively there's like definitely over a century of real estate experience there. So it's nice to get to pick everybody's brain a little.
Oh, yeah, no, for sure, definitely. It's always nice to kind of get everybody in the same room again, which is also very nice, especially after 2 years of COVID. It feels like, yeah, I have colleagues, but they're all like online friends, you know what I mean?
Yeah, exactly.
Yeah, no. But yeah,
what about you?
My weekend was good. I on Saturday had a friend from out of town that came to town, so we hung out a little bit. And on Sunday we had a gender reveal party for a really good friend of mine. They are welcoming a second daughter, which congratulations.
Wow.
But for today, I'm pretty sure our listener did not log on to listen about how our weekend or how our last week went. As per the title, for today, we are actually going to talk about the market for July 2022.
Right. Of course. Like what a big change we've gone through in the last couple months here, right? Especially with all these interest rate hikes. So definitely an interesting topic to tune into today.
Yeah, no, definitely. You're absolutely right. The interest rate hike has now officially really entered us into a brand new cycle for home buyers where demands are much lower. And us being on the field every single day, I can tell you that the urgency is even lower than that, right? So yeah, let us spend the next 10-15 minutes, try to do a proper analysis. What we'll do is we'll start with sales number, then we'll move into price, then we'll move into inventory, and then sales to active ratio. And at the end, we're going to try our best to make sense of all of this and then obviously what to expect for the rest of the year. So Jeff, why don't you take it away with some sales numbers?
All right, let's do it. For those of you who are only tuning into the audio version of our podcast, we will be sharing some charts and graphs today just to paint a clearer picture for everybody. If you are curious as to the content that we're sharing, please head over to our YouTube channel and you'll be able to find all of that. All right, so the first graph that I'm showing is talking about the sales activity for the month of July. Now, in July in Greater Vancouver, we sold 1,887 homes. That's a 43.3% drop in sales compared to July of 2021 and a 22.8% decrease compared to the last month of June in 2022. Now, you can see from this chart here that in July, it was actually the lowest amount of sales activity we've had in 12 years. 12 years ago, everyone who's listening remembers, that was the Winter Olympics when Vancouver hosted back then. And Joe, you yourself, in the span of the 12 years that's gone by, think about how many pre-sales have come up since then. So inventory has greatly increased in the last 12 years, and we're still hitting sales numbers like this, which is a little bit shocking.
Yeah.
Yeah,
go ahead.
No worries. When you compare the crazy summer that we had last year, of course, everything is going to seem slower. And when you hear in the media that like, oh, the stock market's going to crash, blah, 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 these are all just bait headlines. Like what Joe and I are here trying to do is just to bring a little bit more of a real picture of what the real estate market is like. And I'll use this analogy. Imagine for the last 16, 18 months, the real estate market, we're traveling on a highway. We're all in cars and we're going 120 kilometers an hour. Now, for the month of July, all of a sudden we slowed down to 60 kilometers an hour. Are we going to feel that change in speed? Well, of course you are. Now, is 60 kilometers an hour slow by any means? Well, it really depends on your perspective, right? I guarantee you, if you're going 60 kilometers an hour in a school zone, you're going to probably get pulled over by a police officer and your car may be impounded. And what we're trying to say there is like, yeah, the real estate market has slowed down. We are not denying that, but it has not stopped into a standstill. Now, also, different product types have also responded differently in the last month. And using the same analogy, we can detached homes as well as townhouses as like SUVs. So these SUVs have slowed down about 50%. So they are going from 120 kilometers an hour to 60 kilometers an hour. But what's interesting to note is that condos, let's say these are the sports sedans, they've actually only slowed down 36.4%. So they are still moving at a faster rate than the detached homes and townhomes. I think drawing on from this data, we can pretty much come to the conclusion that, like you have taught me before, generally what comes up the quickest does come down the quickest as well. And during the peak of COVID, did notice that the detached homes and townhomes, the prices just kind of skyrocketed and shot up the quickest, whereas the condos kind of lagged behind. And now we're seeing the reverse happen, whereas the condos are dropping a little bit slower, but townhouses and detached houses have seen a sharper price decrease.
That's right. That's right. And that's just with sales numbers. Yeah, these are some significant drop. But of course, like you said, the car is still moving. That's the most important thing. Since you still have that graph up there, I'll just quickly say, look, that graph it's not zero. And a lot of times what happens is that when things are going too hot or too slow, the media like to overblow it, making it sound like the graph is completely down to zero already, right? So that's just something that I want to kind of quickly emphasize and add on there. Now that we understand what's happening with sales, how about the $1 million question? What's happening with the prices, right? We know that
money, baby.
Money. I know that sales activity slowed down. So for the month of July 2022, our current HPI bench price for all products is sitting at 1,207,400. This is an increase of 10.3% compared to last July. But I would like to say, is this number even still relevant? It is a true statement. I'm not saying it's false, but now it just feels like it's a feel good story, right? Now, if we shrink the time frame a little bit, then it kind of prints a better picture compared to June. So that's like last month. Our prices actually have come down by 2.3%. Now, 2.3%, Jeff, seems okay, yeah, doesn't hurt. I mean, GST is 5, right? And then, however, let's just assume that we keep it at this pace, right? And then, if we last for over a year, then what will happen is that. So what I was trying to say is that may seem okay, but if we keep it at this pace, and let's say that this lasts for 12 months, this would mean that we will experience a 27.6% decrease in price same time next year. Now, if you put it that way, it does start to sound a little scary. I'll give you a reference. If your home currently is worth $1 million and we keep it at this pace, your same home is going to be worth just a little bit less than $750,000, right?
You can deliver that news to the seller, not me.
Oh my God, I'm a little too scared sometimes, but hey, it's all what they want to do, right? So what I'm gonna do is then I'm gonna pull out this graph that I have prepared directly from the real estate board stat center, just kind of paint that picture for you guys. So what I have here right now is the HPI, MLS HPI prices. So if you follow my cursor, I'm all the way at the end. That's July of 2022. If you look at the graph, that basically just means that, any gain that we made from January of 2022 till now, that's all been erased. That's all gone. Right. Now that's the HPI. If we look at something a little bit more raw, which is the average sales price, this is currently where we're at. If we pull the mouse cursor back, that probably means that anything after October of last year, October 2021, everything that has gained since that point is now all gone already. So that's kind of what's happening with the prices. Then Jeff, why don't we take it away with some listing numbers we have?
Yeah, of course. Like, in terms of numbers of listings, we're talking about supply and inventory. The most interesting part is that, our sales numbers have gone down, but the number of listings have not shot up yet. Now, let's say the numbers of listings has shot up. That would bring us to a market more like what's going on in Las Vegas and in Tampa, Florida. And if that were the case, then we would be in a little bit more of a sticky situation. But at the end of July here, also these numbers are taken from Stat Center. At the end of July in 2022, we had 10,440 homes available on the market, which was a 4.8% decrease in total inventory if we pull it back to July of 2021, where we had 10,969 and a 1.3% decrease from June. So although the sales activity has dropped, so has the amount of listings, which is something to remember because we will touch on this a little bit later again. Now, Joe, in real estate, we talk a lot about sales to active ratio. So would you mind explaining a little bit of that to our listeners?
Yeah, so we just spent a good last 5 to 8 minutes throwing a bunch of numbers at you guys, and these are obviously like this is how many homes, this is how many sales. Like a lot of these won't make any sense unless we kind of put them all together, and that's what really sales to active ratio is for. A lot of agents like to refer this. What is sales to active ratio? Very simply put, is the percentage of available listings that has been sold. All right, so higher the ratio means that larger portion of the homes has been sold, which obviously means it's a stronger buyer market, and vice versa. If the lower the ratio, then obviously that we're entering towards sellers market, right? So in the real estate industry, we have a saying that for a prolonged period of time, if the percentage is anywhere between 12 to 20%, we count that as a balanced market. Anything over 20% is a seller's market, and anything under 12% is the buyer's market. So bringing it to July of 2022, our overall sales to active ratio is sitting at 18.3%. Now, if we break that down by product type, we're talking about 11.8% for detached houses, 20% for attached, which means it's half duplexes and townhouses, and 24.5% for apartments. So this, of course, links back to the sales velocity that we're talking about. And obviously, this one says that detached houses is now officially kind of almost entering a buyer's market, and condos is still actually remaining itself onto a seller's market, right?
Yeah.
So yeah, like firstly, like we said, Jeff, from the beginning of the podcast, the rapid increase of interest rate definitely has curbed some buyer demand, and buyers are now really thinking twice before they do anything, right? And the second thing we feel like the reason for the slowdown is really because a lot of buyers and a lot of agents are literally mentally on a vacation, like on a break, like they're on vacation mode right now, right? This reminds me of the call session that we had last week, where we for one of our listings, we called 80 of the big player agents around that particular neighborhood, and I swear to God, Jeff, I don't know, remember, but like half of them were telling me that they're on vacation or they're on some sort of staycation, right?
Yeah, I think the reasons I heard were number one, I'm on a boat. Number two, I'm on a boat. And number three, I'm on a boat. So I think I'm missing something here. It sounds like all of these agents all have boats. I'm like lagging behind, or maybe I'm not working hard enough or something like that. Because I know I don't own a boat. I don't know if you do.
Motivation. Then again, they're the big players, right? So maybe they do own boats, right? And plus, this is the West Coast. It's nice, right? But no. All jokes aside, though, are they to be blamed, Jeff? Like, we just literally came out of 2 years of shutdown, locking ourselves in our homes or locking ourselves within our own city, right? Now, finally, there is no quarantine periods and stuff like that. I can see why people are like kind of shifting around and trying to enjoy themselves, right? I'm guilty of that as well, Jeff. Like, anyone that follows my social media, they know that in the last couple of months, I think I took like 4 to 5 mini vacations down to the States, stay within Canada. I mean, guilty as charged.
Yeah, I mean, those photos of you in Banff, man, those glacial waters, very beautiful.
Exactly. Now, bring it back to the market. I think what we're trying to say is in the last 2 years, the main theme on the market was scarcity and speed. There's very little listing and there's a lot of buyers. And if you find something that you truly match your needs, then it's about how ruthless and how quickly you can go in and do all of this stuff, right? And we can finally say that the buyers are finally out of that sentiment now. They are taking their sweet time.
100%. And, sure, sales activity has slowed for summertime. People are no longer in a buyer frenzy like it's Black Friday outside of Best Buy and everyone wants to line up for that heavily discounted TV, right? But we're still seeing good properties go into multiple offer situations. I mean, you yourself went through that there's just this past weekend with a couple of your clients. And even myself, I had a colleague who had a listing out in Burnaby, a 2-bedroom condo. And after the first day of showing, they had about 40 groups come in and they ended up with 3 offers after the first day. So it does definitely look like, the condos and the lower ticket products are still moving. And as long as a house is marketed properly and presented well, they are still moving and buyers are still heading towards that type of product. It is very, very important. I want to stress this fact that if you are looking to sell your property right now, that you do take the extra effort and time to make your property as show ready as possible. That's meaning, if you need that extra coat of paint, do it. If you need to declutter, do it, because it's really going to hurt you as the seller in the long run if you do not do those things. I mean, this is a rhetorical question, but Joe, given the exact same type of product in the same building, same price, what would you go for? The place that looks like it's been used as a frat house for the last 2 years? Or are you going to look for the one that's been completely decluttered and show ready and looks like you can move in the next day?
That's right. No, I mean, of course, I'll pick the one that's ready to go, right? Less money that I have to spend after I buy the home, right?
100%. So if you don't want your home to sit on the market, make sure it's presentable, and please work with your realtor to figure out how to do that in the best way possible. And if you're holding on to a product type that maybe is targeted more towards builders and renovators, there's also some things to note too. The loans that these builders and developers acquire are at a higher interest rate than a personal loan. So these investors are a lot more careful about how much risk they're willing to take on in terms of, okay, well, what is the interest rate going to be like in the future? What are building costs going to be in terms of the raw product? So they are actually a lot more careful and taking their time in selecting and taking on a new project before doing so.
That's right. That's right. I think you're absolutely right. The days where, I pick this up and then I just shoot a couple photos, present, and I'll put on MLS, open house this weekend, offer review on Tuesday, 5 p.m. And then boom, gone. Those days are gone, like way past us already. Back down to the basic. You're absolutely right. Declutter, beautify your home if needed, of course, and proper cleaning, and put your home in the best angle possible to present that to the buyer, right?
100%. Those low resolution iPhone photos might not cut it anymore. So you definitely want to hire a professional photographer for that.
Right. Now let's now that we kind of analyze the numbers, let's quickly just look into the future. What should we be expecting, right, for at least the rest of the year, right? Let's talk about the short future, which is the month of August, right? As we're recording this video, it's August the 15th, and we're currently, I just checked with the check online, we're sitting at 762 homes sold. So I like to say, if everything stays the same for the rest of the month, then we're scheduled to be roughly about just a little bit over 1,500 homes sold. However, me and you both know that that is generally not the case. The last 2 months of August is generally one of the slowest time in the whole real estate, I guess, cycle for the year. It's funny because just before we pop onto the podcast, I was kind of scrolling through my phone and then I saw Ryan Serhant, a celebrity broker agent in New York, and even he was saying that the last 2 months of August, generally what he does is that he works on the business instead of working in the business. Is a good time for him to kind of reevaluate everything that has happened for the first part of the year and how to go strong to end the year. Right.
Yeah. So I definitely saw the same reel on Instagram. Isn't it interesting how, if we follow the similar accounts, Instagram just kind of pushes you the exact same content.
They're listening to us. That's why.
I know. Don't even get me started on targeted ads. But hearing what Ryan Serhant said about the last 2 months of August, got me thinking, well, maybe this is also a nice time for me to take a vacation. I mean, you've had 4 to 5. I think I'm still sitting at a big 0.
Well, you just remember, things are still moving. So it depends on where obviously your business is at. But I just want to quickly take this 1,500 homes sold into perspective for people, because as if 1,500 is like, oh, 1,500 is 1,500, right? So in comparison, there's two specific timelines in history that I want to compare this 1,500 to. The first one is during the middle of the COVID shutdown. That's about April, May of 2020. For that month, we had just a little bit over 1,100 homes sold, okay, in Greater Vancouver. That's the first stat. You remember that was a time when people were literally scared for their life. I was fortunate enough to do two deals during that period, and both deals I was not able to go into the actual suite. Everything has to be done virtual. That's when I learned how to use Zoom, FaceTime, and all that stuff. Yeah, so that was very, very challenging time to be even doing business, right? And the second stat I wanted to compare to is during the great real estate recession of 2008, that August, we had 1,576 homes sold. And once again, the same analogy applied. Back in 2008, when I first joined the industry, the city didn't have this many homes. I mean, Brentwood there's barely any high rises in Brentwood in 2008, right?
I never even heard of Brentwood at that time.
Exactly, right? So that's just kind of putting things into reference. So it seems like for August, we are most likely going to be hitting some sort of historic low in terms of home sale, just like the data that we provided for you in July. Now, let's kind of go a little bit longer. Another way I really like to look at the market and kind of project where things are projected to go is to look at the percentage compared to the 10-year average. So I did prepare this chart here. I guess I'll just quickly share with everybody. I feel like this chart or this number really a lot of people doesn't really talk about it, right? So what I have here is I have the 10-year average percentage to the 10-year average all the way back to about March of 2015. Now, let's just quickly ignore the March 2020 until July 2020, because that's the only exception. You see this huge dip, but however, I understand that that's when the whole world stopped, right? It wasn't like, oh, the market wasn't doing well, like nobody was doing anything, right? When I look at this chart, what I generally like to say is that if we're kind of plus minus 3% or 4% to the 10-year average, generally that means that the price will stay relatively stable. However, when we get to an extreme, such as, for example, on this chart from March 2018 all the way to about July 2019, 2019, we were consistently in this really deep red, I guess, in comparison to the 10-year average. And this is when that price decrease all started to happen, right? Don't forget, this is the time where the government introduced anti-home tax, speculation tax, foreign buyer tax, and all that stuff, right? And then as you can see, once we kind of enter the summer of 2020, when the world started to kind of ease off a little bit, you can see that the 10 percentage of 10-year average shot up and then all the way at about March of 2021. And that's kind of when like things were selling at historic, levels, historic highs and stuff like that. We dipped until summer, and then during the fall season, we went up again. And then the moment they announced that we're going to start increase interest rate, you can see that now we're in the deep red. So it will be interesting because we just talked about the August number. It seems like our August number is also going to be pretty far away from the percentage to 10-year average. So this is the reason why we're starting to feel that decrease or correction in price. And yeah, so that's kind of the thing that I want to just quickly share with everybody. And as we kind of hit into the fall market, I think what's really, really important, a crucial factor is how is the inventory going to react? Now that the vacation is over, people are coming back into town. Are they going to start listing their home? Or, on the flip side, are they going to start looking for their home again? Right? Because this is what I will say. If the listing amount overpowers the buyer demand for fall, then trust me, we are going to see a further correction onto the price. But however, if nobody's listing or very little people are listing, and then the buyers are starting to come back from the buyer vacation and they still want to buy, well, we're still going to be at this very low inventory state. And if that is the case, then I think the price correction that the buyers are hoping for might not last too long. And especially if we're talking about condos here. And then, of course, with townhouses and single family houses, there's a lot more to catch up on, right?
Yeah. So it sounds like the inventory level is a key number to keep an eye out on. But
Exactly.
Joe, hearing you talk about COVID and shutdown, whenever I hear those two words in the same sentence, I just think about those crazy lineups outside of Costco. And I think most of our listeners will resonate with this. And everyone's lining up to buy toilet paper, of all things. It's like all of a sudden, one of the COVID symptoms is that you can't control your bowel movements, and everyone needs to go to the toilet a lot. But back to the podcast here. I think another thing we need to keep an eye out on is watching what Big Brother is going to do. And what I mean by Big Brother is the Bank of Canada. Now, we've seen the impact that interest rates have on the market, and we know that in September, we're most likely going to get another interest rate hike. Now, what exactly is the percentage that we're going to go up by? Is it going to be 0.25%? Is it going to be 1%? That number will dictate what type of buyer activity we're going to see. And I think, the other day when the US announced that their inflation rate was lower than expected, we all kind of had a sigh of relief. And, obviously the big question is Canada going to follow in the same trend? Well, I think historically, at least from my personal experience, is that Canada is more of a trend follower of the US than a trend setter. So I am optimistic about the situation, and hopefully things will see a little bit of normalization sooner rather than later.
Yeah. I bet you one thing I would just add is that I preferred the current gas prices than the gas prices like 2 months ago. Let's just put it that way.
Yeah, but I mean, hey, that's another sign for us to go electric.
That's true.
Yeah.
That's true. Sorry to cut you off.
Yeah.
Continue. Yeah.
Oh no, 100%. That's totally fine. And the last thing I just kind of want to touch on is rental prices. Now, I think everyone listening to this podcast right now has been affected by the crazy spike in rental prices in one way or another. I've personally know a lot of friends that this has affected. I remember even 2 months ago looking for apartments for a friend, and a 1-bedroom condo was like $1,800. And back then we were already like, whoa, this is super, super expensive. But ever since these interest rate hikes and we've seen buyer activity slow, everyone's kind of just flocked to the rental market. And there is another statistic that I want to share with everyone here. This was available through Live Rent BC. One moment. Look at this, Joe. In Vancouver, the average price for a 1-bedroom condo, unfurnished, mind you, was $2,430. What the heck is up with that?
Wow. That's a tough pill to swallow. I'll put it that way.
Like, I don't remember the last time we saw prices like that. And, looking at it from an investor standpoint, sure, buyer activity has slowed, but if rental prices keep going up, at a certain point, it will make more sense for them to take on a mortgage themselves than to pay for someone else's mortgage, right?
Oh, yeah. Jeff, for some reason, I think your share screen is a little bit off. Just seeing the top part of your monitor for some reason.
Oh, let me give that another try. Hold on.
Yeah, let's give it. There we go. There we go. That's much better. Yeah.
Awesome. So, yeah, so you guys can see here that Vancouver for a 1-bedroom says $2,400. Richmond, fares a little bit better at $1,900. North Vancouver, not surprised, is still one of the most expensive at $2,500 on average for a 1-bedroom condo. It is very nice in North Vancouver.
Definitely. Yeah, no, one thing about the rental prices, I must say, is that if this just continued to increase at a certain point, professional investors are going to see value in buying real estate again, right? Because they might not need mortgage, or they might not need 80% mortgage, right? So this increase of interest rate might not impact them all that much. And on top of that, I mean, where else are they putting the money? Crypto has its problems. Stock market is, right now. And don't forget, like, inflation is still happening. Yes, it's better, but we're not out of the woods yet, right? So at a certain point, people are like, well, you know what? If rent is this good, especially for the small 1-bedroom, I'm getting like great rental return, then why not just put my money there? Because what we always say, real estate for the long term, it's always going to go up, right? So that's why I'm seeing that this rental prices is definitely something to track, because once again, at a certain point, a lot of investors just see a lot of value in buying an investment property instead of just keeping it in cash. So
Absolutely.
yeah, so that kind of wraps up with the market update that we have for July 2022. Jeff, seemed like a pretty gloomy update.
Yeah, I mean, hey, listen, it does sound like we're traveling through some turbulent waters, but we're not quite in a storm yet. And really, it depends on what side of the fence you're standing on. From a seller perspective, yes, things have slowed down. Yes, prices have come down. But does that mean that your home is not going to sell? Absolutely not. You know, we still, everything's still the same in how you should market a home. Like, do your decluttering, find yourself a good realtor, find a good mortgage advisor. The team of people that you choose to hire will ultimately determine whether or not you are going to get the desired result. So please, please take the extra care and time to make your home as presentable as possible. Just put yourself in the buyer's shoes if you're looking at your own home from their perspective. What would you do to make your home the most attractive one in your neighborhood?
And make sure
And
that you have that conversation with your agent or get in touch with us.
100% shameless plug right there.
Yeah, right there.
And you know what? On the other side of the fence, Joe, like, you know, it seems like you've been pretty happy recently because you're working with a lot of buyers too, and they all seem like they're pretty happy as well.
Oh yeah, no, some of my buyers are having a hell of a time right now, right? Because obviously coming from the craziness of rinse and repeat, go see a home, lose on offer, go see a home. It's not even a home that they truly like, right? They now have
Mhm.
choices, and now they are in general in the position of power, right? They see something that they truly like, then they can put down the offer, do the due diligence and stuff like that, right? So yeah,
Mhm.
a lot of my buyers are super super happy about this particular market. Some has decided I'll keep waiting, but some of them feels like, you know what, it's impossible to catch the bottom of the market. So if this is going to work out for me, this is going to work out for me. At least I know that I'm already buying something at a lower price than, for example, 4 months ago, right? So and that would literally, yeah, the end of the podcast. So thank you guys so much for listening. If you like what you heard and you like other content, please follow, give us a like, and then anything that you want us to talk about, let us know. All right. So once again, my name is Joe.
My name is Jeff, and
And
we are the mic for Vancouver Real Estate. You guys have a good week.
we look forward to seeing you next week. Bye now.
Thanks, Joe. Bye.
Bye.